You're 21 years old, sitting in a plastic chair, wearing a suit you bought on sale, and you're staring at a lobby full of people who look exactly like you. Everyone wants the same thing: a seat at the table, a shot at Wall Street. And right now, you're at the very bottom of the food chain. This is what your life actually looks like at every single rank on Wall Street. From the intern nobody remembers to the managing director pulling in $2 million a year. And more importantly, this is what nobody tells you about the price you pay at each level to get there. Let's start where everyone starts: the internship. You're a summer analyst, which is a fancy title for a 10-week audition where you do whatever anyone tells you. You're 20, maybe 21. You got this spot because you networked like crazy, prepped for months, and survived multiple rounds of interviews at a top university. Now, you show up every morning before anyone asks you to, and you stay later than you need to. Your job is simple: build slides, fix formatting, pull data into spreadsheets. Don't mess up. Don't complain. Don't be the person who asks the wrong question in front of a client. The pay is actually solid for a college kid, roughly $20,000 to $25,000 for the summer, prorated from a $110,000 annual salary. But the real compensation isn't money. It's the return offer. About 80% of full-time analyst hires at the big banks come from the summer intern pool. So if you blow this, there might not be a second shot. That pressure is real, and it follows you every single day for 10 weeks straight. Now let's say you survived. You got the return offer. You graduate, you move to New York, and you start as a full-time analyst. You're 22 to 25 years old, and your base salary is somewhere between $100,000 and $125,000. Sounds amazing, right? Your total compensation with the year-end bonus lands between $165,000 and $225,000 at a bulge bracket bank. Some elite boutiques like Evercore or Centerview push top bucket analysts past $250,000 all in. But here's the trade-off. You are working 70 to 85 hours a week. You're glued to your laptop at midnight fixing a pitch book because a vice president decided to change 3 words in a sentence. You eat dinner at your desk more nights than you don't. Your phone is never off. Weekends aren't guaranteed. You're building financial models, managing data rooms, tracking buyers and sellers, and doing whatever the associate and VP above you need done. Most analysts do this for 2 to 3 years, and many of them don't stay in banking. They leave for private equity, hedge funds, venture capital, or corporate finance. This is one of the biggest unspoken truths on Wall Street. For a lot of people, the analyst role isn't the career, it's the launch pad. But let's say you stay, or maybe you went and got your MBA and came back. Now you're an associate. You're 25 to 35 years old, earning a base salary between $175,000 and $225,000, with total compensation ranging from $285,000 to $500,000. You're still doing Excel work and PowerPoint, but now you're the one assigning it and reviewing it. You attend more meetings, interact with clients, and start learning how deals actually get done at a higher level. The hours drop slightly, maybe 65 to 80 hours a week, but the pressure shifts. Because now the question isn't whether you can grind, it's whether you can lead. Can you manage a team? Can you think on your feet in front of a client? Can you spot the mistake in a model before it goes out? Promotion to vice president takes 3 to 4 years from here, and it's not guaranteed. The bank starts evaluating whether you have the potential to eventually bring in business. If the answer is no, you might get stuck or pushed out. Now you're a VP. You're 28 to 40 years old. Base salary sits between $250,000 and $300,000, and total compensation is $525,000 to $800,000. At elite boutiques, some VPs clear close to $900,000. You've made it to the upper middle class of Wall Street. But here's the thing almost nobody talks about. This is widely considered the hardest job in investment banking. You're the bridge between the junior bankers doing the execution work and the senior bankers closing deals and bringing in clients. You manage projects, check work, run calls with buyers and sellers, and start building your own relationships. Your hours drop to maybe 55 to 70 per week, but the mental load goes up significantly. You're expected to start showing you can eventually become a rainmaker. And if you can't prove that in 3 to 4 years, you might never make it past this level. Let's say you push through. You're promoted to director, sometimes called senior vice president. You're 32 to 45, earning a base between $300,000 and $350,000, with total compensation in the $700,000 to $900,000 range. At this level, your job is part execution, part rainmaking. You're actively developing relationships, pitching potential clients, and leading deal teams. Your hours are 50 to 60 per week, but travel picks up significantly. You're flying to meet CEOs and board members. You're proving you can generate revenue for the firm. Promotion to managing director usually takes 2 to 3 years from here. And this is where Wall Street becomes truly ruthless. If you can't bring in the business, you won't survive at this altitude. And then, the top. Managing Director. You're 35 to 50 years old. Your base salary is $400,000 to $600,000. Your total compensation ranges from $1 million to $2 million or more. Senior MDs and group heads at major banks can earn $5 million plus in strong years. Your bonus is directly tied to the fees you generate. A great year means a massive payday. A bad year could mean close to nothing. Your entire job is relationships. You're the rainmaker. You're on planes constantly, meeting with Fortune 500 executives, pitching billion-dollar mergers, and your reputation is your currency. The hours are 50 to 60 per week in the office, but the job never truly stops. Your phone rings at dinner, on vacation, and on holidays. Here's what this whole ladder reveals. Wall Street pays more than almost any other career path in America, but every dollar comes at a cost: time, health, relationships, freedom. The people who thrive on Wall Street aren't just smart, they're relentless. They're willing to sacrifice things most people won't. And if that trade-off makes sense to you, this might be your path. But go in with your eyes open, because the ranks are clear, the money is real, and so is the price you pay to climb them.